Whereas if you have a period of stagflation or even hyperinflation, you want to overweight your base metals. You want to overweight your energy. You want to overweight gold. But you don't want to have a large amount of duration in your portfolio. You don't want to have any. You want to short bonds. So, but the tariffs weren't some like liquidity shock or a recessionary shock right away. It was a self-inflicted wound, and they're completely and arbitrarily, capriciously up to one person who can make the tariffs anything he wants.
In today's news recap, Chinese trader who made $1.5 billion on gold builds a giant bet on copper. A reclusive Chinese billionaire whose prescient gold trades turned into an eye-catching windfall has now become the country's biggest copper bull, amassing a bet worth nearly $1 billion in a market jolted by escalating competition between the U.S. and China. Bian, who made an early fortune in plastic tubes before seeking a quiet life in Gibraltar, has made waves over the last 2 years with his investment in Chinese gold futures, betting on what he argued would be a global effort to reduce reliance on the U.S. dollar and counter inflation worries. His fund came in just as bullion was beginning a record-breaking ascent and made roughly $1.5 billion in profit in the process, according to Bloomberg calculations. Today, as a trade war and potential truce roil markets, Bian and his brokerage, Zhongcai Futures, are responsible for the largest net long position in copper contracts on the Shanghai Futures Exchange, according to sources familiar with the matter and bourse data. After 10 months of purchases, at the end of Friday, they were long nearly 90,000 tons in copper futures, counting Bian's own investment in funds he manages through Zhongcai, enough to dwarf any peers. It's a position that the 61-year-old tycoon, who personally accounts for the lion's share of the Zhongcai investment, intends to maintain, the sources said, even after geopolitical ructions prompted some of his investors to pull out, an expression of confidence in the metal and in the economy of the world's largest consumer. The sources asked not to be named as company discussions are private. It's a quite unique copper position that is worth following, said Li Yao, a vice president of COFCO Futures Shanghai North Bund Division. It reflects a very long-term bullish sentiment on the metal based on fundamentals, which differs from the usual mid- or short-term strategies we see in the market. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Gold is a replacing the dollar as the world's reserve currency, so it's an absolutely essential hold. I think gold does best, and I've been doing this for 34 years as a professional investor. So gold does best in recessions. I just don't see that happening anymore. I love to see nominal and real interest rates plunge. That's when gold really shines the most, and I just don't see nominal rates falling right now. Nominal rates are going to rise. And I think that on the long end, they could really spike, especially if we start massive fiscal deficits again, even more than we already have, Jesse. I mean, think about this tenuous fiscal situation. You know, the Congress can score the extension of TCJA any way they want. They can use accounting gimmicks, but that will add about $4 trillion to the deficit over 10 years. Now you're going to get a little bit better, you're going to get some growth. I'm a big proponent of tax cuts, and I'm a bigger proponent of cutting spending. But when you cut taxes and you increase spending, I mean, you're going to really put a dent in the deficit. And we don't have any room for that. We're running $2 trillion deficits in peacetime and in supposedly prosperity. What happens in a recession? Those things tend to triple. So you can get a $6 trillion deficit. So if you're looking for like I said, I am now net long the stock market. I have some protection with gold. I have some inflation hedges in the portfolio. I have a lot of short duration bonds because you're still getting paid 4.25% guaranteed. I don't think the Fed's going to be cutting the Fed funds rate anytime in the immediate future. And so, but having said that, the room on the upside is very limited, in my opinion, especially for the Mag 7 and the stuff that everybody wants to own, regardless of what valuation. They don't care. They just want to own those 7 stocks. So that's a big problem. I do not look at the gold silver ratio ever, because that if you use that as a timing tool, it's just all does it tell you is that gold is more expensive than silver, than historically the case. But that's not a reason for me to buy silver and sell gold. Silver, and it is on my radar, to answer your question, for the first time in a very long time. I like silver in times of when global growth is going to accelerate in times of monetary chaos. That's when silver tends to do better than gold. Because I said, silver is a monetary metal, but it's also an industrial metal. So if I can get a situation where global growth is going to be okay, and I think that's the case, but we're going to have a problem with inflation, that's when silver shines the most. So yes, silver is on my radar for the first time in a very long time. It could even outperform gold for a while. Normally, and that's very, and historically, Jesse, it's a very rare situation. Normally gold is much better. But so gold is real money. So during times of monetary chaos, you want to overweight gold. During times of recessions, you want to overweight gold. But when you see inflation and growth accelerating on a second derivative basis, silver will tend to outperform gold. Right now, I'm only in royalty companies. So, but yeah, the volatility on silver is through the roof. The volatility on silver equities is a derivative of that volatility. It's a much higher rate of change, volatility. So yeah, I'm not looking at the silver equities right now, but just the metal.
In today's news recap, silver eyes $33.23 breakout as triangle pattern signals a volatile move. Silver is trading sideways at $32.35 in a tightening symmetrical triangle that has everyone waiting for a breakout. Gold had its worst week since November as risk appetite surged following a temporary U.S.-China trade truce. The U.S. dollar index fell 0.3% on Monday, making dollar-denominated precious metals more attractive to international buyers. Sentiment changed after Moody's downgraded the U.S. sovereign credit rating by 1 notch, citing rising debt risks. That downgrade, combined with a return to risk-off trading, has added some shine back to gold, said Tim Waterer, chief market analyst at KCM Trade. But the real wild card is Donald Trump's tariff threats. Treasury Secretary Scott Bessent confirmed the administration will impose duties on countries that don't engage in good faith trade negotiations. That has rekindled fears of another round of global uncertainty and a potential tailwind for safe haven assets like gold and silver. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
There's an inexorable trend in international trade and in international currency reserves. Countries are moving away from treasuries in the US dollar. Think of it from China's perspective. China had 10%, then it was 54%, then it was 145%, and now it's back to 30. 30% is still pretty hefty duty on China, but here's the point. If I'm China And I see what happened with Russia, and I see what happened to my own country with the trade war. How much of my currency reserves, my trade surplus, do I want to recycle in dollars and treasuries? And the answer is a lot less, a lot less. So going forward, you're going to continue to see gold supplant the US dollar as the world's reserve currency, which is why I still think holding some gold, even though I don't think a recession is imminent any longer. Again, I reiterate, I don't think we're going to have a booming economy and a booming stock market, but I think the deep, recession / depression is off the table for at least now. Who knows what happens in 90 days? Jesse, I have a very robust model that I use to predict these machinations, but there is no model for any one person's brain. And Donald Trump has a lot of power. Those executive orders can come fast and furious, and you just don't know what's going to hit you. So tariffs can go up, tariffs can go down no longer, though. I don't think there's any chance that the tariffs will go below 10% on the world, and probably not below 10% on China. Even if let's just say the fentanyl stops and the tariffs can maybe go to 10%, but who knows? I'll reiterate again. It's up to one man. He has the power of the executive orders. He can make them whatever he wants. You could tie it up in court, but in the meantime, the damage is done. And the inexorable trend of moving away from the dollar as the repository of a trade surplus, that is only increasing.
What do you think about Michael Pento's take? Is he spot on or sounding the alarm too early? Whether you're a seasoned stacker or just waking up to the risks of fiat and central bank manipulation, Pento's perspective hits hard with historical context, monetary realism, and a no-nonsense approach to protecting wealth. Drop your thoughts in the comments. Are you adjusting your strategy based on what Pento sees coming, or do you think the Fed still has a few tricks left? Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.